What up, guys? Here's the long-awaited M1 and M3 refined POY, I guess, segment that we'll kind of go over. Now, I'm going to start this off by saying both are equally as powerful. Now, what needs to be mentioned here, and what needs to really be noted, is the development in price from when you want to enter. Now, what I mean by that is essentially when we come into a zone, okay, and we build liquidity like this, and we call this our POY. This is the M3 overall range, and this is maybe your M1 refined within that. A lot of people don't know when to get involved, right? So you look at this and you see something develop similar to what's happening right here. We break down, we come up, we push. Okay, we have a little flip zone, but we have a very weak break. Okay, this doesn't come down into here and then come back up. Okay, in a case like this, you're looking for confirmations probably somewhere in here, right? You can probably look for your initial tap to, especially when liquidity is built like this, initial tap to get swept, which it happens here, and possibly look for your confirmations in here for the 5 second. But you need to manage aggressively. So if you're using an M3 with an unmitigated M1 that rests above, it's all in how you manage the position. It's probably the easiest way that I can put it. Now, if we were built something like this and there was a bunch of different mitigations in here and there was the last point of liquidity that rests here, we get the reaction to this, we sweep up into here, into the overall range just above this, I would be a lot more enticed into a 5 second confirmation in here and feel a lot more confident in this producing a strong reaction, given the fact that we had levels to take all the way through. But because our last level of liquidity is essentially in here, you know, you have to remember how price sort of operates, right? You're going to get the first inrush of sellers that want to sell off of this. And then ultimately, if this doesn't push down and create something to be able to take into this as your new confirmation point, then you need to basically start to decipher where these liquid regions are in the market, right? And in this very specific case, which is oftentimes what ends up happening, we come in, we do break down, but you'll notice just how weak we end up coming down, right? And demand gets created on the liquidation, the order flow shift, on the 1 minute, which obviously is going to solidify that there's going to be liquidity above this high. So in the case that you want to get involved here, you just need to cover these regions, right? You can still easily see this drop down like this, but it's all about management, right? It's all about understanding if you want to get in on a larger sort of POY range, you need to make sure that your expectation is aligned with what the market is going to deliver, and ultimately covering the regions that we are assuming are, you know, this quote-unquote protected region. So getting involved here and taking an L, not a big deal. Again, if you have that mental stamina to understand how price really operates, you can take an L in here, okay? Basically, if you want, take a quarter of your position off at this low, just to be able to protect your stop loss a little wee bit. And furthermore, if you're just having your stop loss above here and you get taken out, knowing that we're coming into, don't double down on this position. Let order flow do what it needs to do to create a new POI to trade from, right? You don't need to be the first one. Order, like, price doesn't just rocket down here. That's not how it works, right? That's just, and the reason it doesn't work that way is because if they're distributing in this case, right, and ultimately getting a larger position filled, it's going to take some time for that to happen, and your job is to identify where that starts happening. And it doesn't necessarily need to be at this first level right here where we break and then start looking in here, but you can in fact get in on the refined POY, especially if we broke down something like this. Okay, we've mitigated, we've come up like this, maybe we broke down, and then we have an area to sweep, creating liquidity to be able to then target like this. So it's all about the delivery in and the delivery out of the POI that really gives it more relevance. And obviously you don't see the delivery out of the POI till hindsight, but ultimately how liquidity is built and where the built up mitigations are sitting, where the weak levels are. In this case, obviously we've developed liquidity, we've taken what's left, right? This is the strong area that's already taken out a level. We've taken liquidity here. We've created inducement to be able to get rid of the early sellers, sweeps out. By the time that happens, they're looking to trade here, which creates that liquidity that we need underneath the lows. So in short, I guess to wrap this up, it's all about the delivery into the POI that gives this M3 more relevance than this M1, and whether or not we have liquidity to take into just the overall POI range, or if we were going to go to something a little bit more specific in the case that we're looking something like this where we swept up, we have a weak break of the low, even though we have liquidity to take from the market, we don't have a lot to target, right? So liquidity to take is one part of the equation. Now, when we come up into here and now we start to see that we've broken through these levels, now it's your turn to start saying, okay, ultimately we're at an extreme refinement. We've induced all the early sellers. I can start looking a lot more aggressively in these areas for the 5-second OFRA to be able to go after what's printed into new liquidity, which is across the built up mitigations that are basically generating liquidity to facilitate the overall, ideally, pro trend, pro order flow move.